Though we did see that underreaction, I guess, or overreaction to the downside when the price fell. So is this just a catch-up of the lost territory? And we do know iron ore is intrinsically volatile, so any correlation is always going to affect price.
That's right, and I think the volatility that's still expected to come through in prices in 2013 might be the reason why some of those calls are coming out that the iron ore prices have, the iron ore miners have been overreacting to the rebound in share price. But of course, you look at the pure play iron ore miners like Fortescue and Atlas Iron, they're purely leveraged towards the iron ore price. So obviously, with the tick up in the iron ore price, you would expect these miners to outperform. And for a stock like Fortescue, for example, you saw how far it fell when we saw the iron ore price pull back significantly through 2012, falling back from sort of $5 all the way down to $3. So huge falls, and it's bounced back strongly. It's also very correlated to the Chinese equity market. That's bounced back very hard as well. Fortescue following that Chinese equity market higher. So we saw the iron ore price again rise after a couple of days break, just a tick below $150 now. So I think it probably has surprised all in the market how quickly and how far it's bounced back, the iron ore price.
Well, let's just look at Fortescue
because by probably short-term factors at the moment. A lot of restocking in China. We saw those Port Hedland statistics come out showing record exports in December. So the miners looking to make the most of these high prices at the moment. But we've seen the likes of Fortescue and Rio's heads of iron ore come out and say they're expecting more short-term volatility. So we're probably going to see a pullback in iron ore prices through 2013.
Well, we're seeing all those big iron ore players weaker today, BHP, Rio and Fortescue. Atlas also down. Atlas has been a bit different over the last few trading sessions. It's been losing steam. Obviously, some profit-taking happening here. Puts Fortescue rather now at $4.99. Are you looking at that $5 level as that breakthrough point, and where to if it does actually break through, regardless of what that iron ore price is going to do?
Yeah, well, Fortescue looks interesting on the charts. Yesterday we saw it hit up some resistance. If we look back across 2012 through July were the last highs we saw previous to the start of the year, and the intraday highs there were $5.10. We saw Fortescue trade all the way to $5.10 yesterday and then pull back from those intraday highs seen in June. And the closing high on that day was $5.05, and Fortescue actually closed 1 cent below that. So you can see that here on a one-year chart of Fortescue. This is where the previous high was at the end of June, and this is exactly where we are at the moment. So on a one-year chart, that's going to look like a pretty key resistance level. If we can break through that, then there would be further upside. If you have a look at a 2-year chart of Fortescue, for example, you can see here this downtrend would probably be the next target price. So just a little bit below $5.60, but first you would need to think that Fortescue is going to need to break through this $5.05 resistance
well,
point.
watch this.
Tim, just getting into the banking space, Combank's flat at 63.24. It passes that billion milestone. All things considered, you know, what is next? What is next in terms of the yield, the appetite for yield? It doesn't seem as if that's gone away as a theme for 2013.
Gone away as yet. The banks, I think, will continue to be a key part of the market through 2013. $101.7 billion is Commonwealth Bank's market cap this morning. It now makes up 8% of the ASX 200 by capitalisation, just behind BHP, which makes up about 10%. And that gap between the number one and number two has actually been narrowing. Back in 2011, BHP used to make up about 15% of the ASX 200. But I think the big four in general are obviously very key to our market. They make up 25% of the ASX 200, a big part of the reason why the ASX rallied through 2012, and if the market's going to continue to rally through 2013 because of that large weighting, the banks are going to have to be supported and are going to have to contribute as well. And Combank now starting to look expensive, but if you look at the performance it's put in, probably that premium over the other banks is warranted. Their quarterly performances have been very strong, thanks a lot to their retail banking. So even so, I think this yield story will still continue through 2013.